Hey guys, welcome to another episode of the 2026 Text Talk. Today I'm going to be talking about wash sale losses. So, I work with a lot of clients who dabble in stock trading, whether it be Robinhood, Drive Wealth. That might be, is that connected to Square? I'm not sure. But then you have like Cash App that does stock trading. So, apps have made trading stocks very, very easy. And so I've been talking about different subjects with taxes. And one of my prior episodes, one of the live attendees was asking, well, Jennifer, what is a wash sale loss? This particular person probably received a tax form and was looking at it, and where it says like all of your stocks, it'll say, it'll have a little section on there that says wash sale loss. So that's what we're going to be talking about today. Now, if this is your first time here, welcome. My name is Jennifer Drew. I am the founder and CEO of Hair CEO. We are a business advisory, bookkeeping, and tax firm specializing in helping self-employed hair professionals and hair business owners run legitimate, profitable, and bankable businesses. And so right now I am doing a 90-day YouTube live challenge for tax purposes, just to answer questions and to prepare you for the filing season. Today is day 63. It's insane. I can't believe it's been 63 days. So this is what we're tackling today. Like I mentioned, if you drop a stock in the comments, if you use Robinhood or Cash App or some type of app where you are trading stocks. Drop that in the comments for me if that is you, because what people don't understand is very easy. Like, you go in there, you put cash in your account, and you're just trading. You're buying stuff, you're selling stuff. And what you may not realize is that every single time that you are selling, you are creating a tax event. And so it always like it makes me laugh when I see a lot of wash sales, because I'm like, okay, I wonder, do they know what they're doing? So let's dive into it. So, a wash sale. So there is a rule. The IRS has a rule, and that rule is you cannot claim a loss if you buy the same stock within 30 days before or after the sale. Okay. So that is the rule. You cannot do that. And so let me just back up for a second. So, like I mentioned, whenever you sell a stock, you are creating a tax event. And so there are some savvy, investors who take a look at their, portfolios, and they will say, okay, this stock has gone down and I purchased it when it was, higher, and I'm trying to maximize my tax savings. So, you know what? I really don't want this stock anymore, or um I can lose some money on this stock. Like, I don't need as many shares. So I'm going to sell some stock to create a loss, right? So a lot of times for your, investors who are savvy and, working with tax professionals, that's something that they will look at and say, okay, well, how can we offset some of this income that I made? Let's look at some stocks that I can sell at a loss to create a loss. And so that's what people do. They look and they see, okay, yep, I can, spare this to create a loss. So when that happens on your tax return, you can write off a portion of that loss. Now, the IRS, what they wanted to do was they created this rule because they wanted to prevent people from creating fake losses or paper losses only to then buy the stock again. So that is why they created this rule. And when you are buying and selling stocks, because it's so simple with, the click of a button on your app now, you may be creating wash sale losses without realizing it. So I want to break this down. I see it a lot. I want to break this down with some numbers with an example. So this will make a little bit more sense. So what we're looking at right here is, this is a scenario. So let's say you buy a stock. Let's just say you buy, I don't know, whatever stock you want to buy. And it is $1,000 a share. Okay. So when you purchase this stock at $1,000, and let's say you purchase this stock on December 1st. Well, if you see that on December 10th, you're checking your app, right? And you're like trying to figure out, okay, did I make any money? Because you always, stocking it, right? On a Robinhood. And you're like, okay, did I make any money? And then you're shocked, like your heart is like sinking because you see that the stock has gone down $200. You're like, dang, man, I lost money already. And you might be scared. And you might be like, you know what? I think this stock is going to go down further. I was trying to make a quick buck, but I got a feeling this stock is going to continue to go down. So I'm going to sell it. So, you sleep on it one night because you see it on the 10th. And on the 11th, you go in and like, nah, I don't want to risk it. I want to save some of my money. So let me make sure I can get my $800 back because I already lost $200. Well, when you do that, you just created a wash sale loss, meaning you cannot take that $200 loss as a tax deduction. So now, it does go towards your basis. So it's not a complete loss, but you have to buy the stock back to even use that basis. And I know I'm going over top of your head, but I'm trying to keep it simple. Jennifer, wash, sale, loss. All right. So when you sell the stock for $200 less than what you purchased it for, but it's only been 10 days, 11 days, no, 10 days, 10 days, you just created a wash sale loss, meaning you can't even take that loss on your tax return. The IRS is like, I'm sorry, when you buy it back. So I'm sorry, let me take a step back. I missed a step. So when I didn't write down this scenario. I should have backed up a little bit. Hold on. So this is not the full scenario. So you buy the stock on the 1st. On the 10th, you realize that it's $200 less, and then you get scared, and then you sell it. But then let's say on the 15th, you buy it back. That's when they're like, oh, no. You cannot take that because it is a wash sale loss. You cannot take the loss because you purchased it back. So that's what the IRS is trying to prevent. And people do it all the time because, whether it's whether they do it on purpose or, maybe they got antsy or I don't know, like sellers regret. And now it's like, oh, let me buy it back. This is the IRS's way of preventing you from really kind of playing the stock game where you can create like a fake loss when in reality you purchased it back because then you were like, you know what? I think it's going to go up. But you can't create a fake loss. And so that's when the IRS is like, no, we're not going to create that loss for you because you purchased it back. So that is a wash sale loss. And I feel like maybe I confused you even more. And if I did, let me know, especially the person that wrote the question, because this came in actually through one of my YouTube lives. The question came in. I can't remember the gentleman's name, but he did ask about this. And so I'm really curious for you, sir. I feel like I butchered this at the end, but if you need me to explain it a different way, or maybe you give me your exact scenario, of course, not all the details, but you can be as general as you want and let me know exactly, what was done, what you did, what app you were using, and I'll do an even better example. So yeah, that was it. So that was today. Tomorrow, I'm going to be answering another question. And like I say, for the rest of the month of March, I am just answering questions that I'm getting, whether it be through YouTube, whether it be through Instagram, whether it be through email, or my clients through the client portal. However, the questions are coming to me. If I have enough time, I am going to be answering them, because this live series ends at the end of this month. Now, if you are a hair professional and or business owner in the hair industry and you want help filing your taxes for 2025 or a prior year, you need to catch up, I want to invite you to click the link in the description. There is a link if you want to work with us. We're working with a limited number of clients for this filing season. So the link is in the description. If you're able to reserve your spot, then that means we have space. But if you are not able to, then that means we are done with reservations for 2026 filing season. All right, so that is it. That's all I have for today. And I will see you again tomorrow when we tackle another subject related to taxes. All right, see you then.